I've got a special guest with us today, Ian Bertini, founder, CEO of BPI Insurance Agency. Welcome, Ian. Thank you so much for being here.
Appreciate it, Alicia, sorry.
That's okay. I might call you something else later. No, I'm kidding. I'm excited for you to be here. Insurance.
Yeah. Yay, insurance.
Yeah. I used to have an insurance license, and so it's like, so I did life insurance.
Okay,
so
that's different though.
That's a hard conversation. Not a hard sell in my, but that's a hard conversation.
It is a hard conversation. That's why I don't do just life insurance anymore, because it is a hard conversation.
Yeah. But definitely something that we all need to know about. And it's a huge part of the home buying process. So that's why I think it's really important. I wanted to bring somebody on the show to talk to us about some things that we should know as people are shopping for their homeowners insurance. So before we dive into things homeowners insurance related and other services you provide, share with us a little bit about you and the professor. I'm dying to know.
Okay. So I guess let's just knock out the elephant in the room, the professor. Yeah. So that has kind of been around in some iteration for, going on 15 years now.
Wow.
Yeah.
Okay.
So I started my insurance career at Nationwide Insurance, and for the last, I was there for 8 years, a little over 8 years, and for the last 5 years that I was there, I was a trainer. So I would teach people how to sell insurance, insurance systems. I would teach licensing, actually. So I taught licensing for that 5 years. And so, I was the guy. Nowadays, you see me very often in a Guayavera. But at that time, I was wearing, I'd wear a lot of sport coats. Not always a suit, but a sport coat when I had patches. I'd wear a bow tie every now and then. Everybody knows my little golf caps that I like to wear. So you put all that together, and that equals professor in a lot of ways, and being a trainer. So that's where it started, is at Nationwide. And then I worked for another independent brokerage. And they were very much into networking and building relationships. And they're actually the ones that taught me to start in the real estate space and start with the home. Okay. And so that was the first time I had to do any actual networking or branding of any kind, marketing. Okay. And so I pulled professor kind of back out and started using that as a moniker, if you will. And so it's kind of stuck from there. And now, I'll walk into somewhere and they may not even know my name, but they know professor. So I hear it pretty often. So that's where that came from.
Yeah. Well, and branding and everything, that's all big.
And it's very fitting because I love to teach. And so I take every opportunity I can to educate people about insurance, because most people know nothing, or very close to nothing about it. So.
Right. And it's something we pay for, and today we're paying a lot for.
A lot.
And it is important for you to know, like, the details of your coverage, because nothing's worse than paying for something and then needing it and finding out, like, wait, I didn't have ABC, right?
And that happens a lot, unfortunately.
That happens a lot, right?
It does.
So when you teach and educate, are you doing it primarily with your partners, like in real estate, or are you doing any direct consumer teaching also?
So I don't have any classes focused directly at consumers. I do want to do that. That's definitely on the radar. Yeah. Now, I do have a class for realtors. It's targeted at realtors. It's a CE class. So I do have a class for that, but I'd love to have something specifically for the consumer. Now, on the consumer side, I educate everybody that I interact with. That's one of the big, I think, differentiators in what we do, is we do take the time to educate folks. Very rarely are we just going to send somebody a quote. If they absolutely, they're at a dealership or something like that, and maybe they need it right away, that's an exception. Or if they're just like, just send me the quote, and they don't want to take the time, then you got to meet folks where they are.
Where they are, and that happens a lot.
It
People
does,
are like,
for sure. But if they're willing to take the time, and most people are, especially on the home buying side, we're going to take the time to walk them through that. We will not send them the quote until we're on the phone with them. And it's not a quote. We put everything in what we call a protection analysis. And we'll account for any existing coverage that's there. If they have other quotes from other carriers, we're going to throw those in there. And we're going to put it all in one place. And it just makes it easier to run through and kind of understand what it is that they're looking at, other than just looking at that last number, which is the premium. What are you getting for that premium? And so very often we'll tell folks, hey, so-and-so, State Farm, Nationwide, whoever it is, they're the better option for you. Go that route, and we'll follow up with you in 6 months.
So you are a broker, right? So therefore, and in terms of like your business and your organization, how big are you all?
Tiny.
Tiny. Okay. Okay. So I like local.
Yeah, for sure. It's my wife and I own the business, own the agency.
I think that's nice, though.
It is. Yeah. We definitely, you're going to get a hold of us for sure.
And that's where I was getting to. Like when somebody has you as their agent, who are they calling when they call?
It's us.
Okay.
And then we have one producer too. Okay. And so that's it. That's just the three of us right now.
Okay. And when someone, because I know this happens too, though, if somebody is needing to access, like you find them an insurance carrier, right? And then they need their insurance carrier. They don't have a relationship with that insurance carrier. Do they still reach out to you, or it
would depend on the situation. They are welcome to reach out to us at any time, and I would say typically do. Usually we're the first call.
I feel like that happens, right?
Yeah. Now, if it's a claim situation, we actually want them to call us first.
Really?
We don't want them to dial the 800 number. Now, there are exceptions to that. If your car's completely totaled, if your house is burned to the ground,
right,
there's not a lot we're going to do in that moment. You need to call the insurance company.
Right.
But if it's an uncertainty, you don't really want to call the insurance company first, whether you're working with a broker or whether you're working with a captive agent.
Oh.
And the reason I say that is because as soon as you dial that 800 number and somebody answers on the other line and it's claims, they're creating an incident. They're going to create a claim for you. And as soon as that claim is created, it doesn't go away. So even if the determination is it's either not going to be covered or it's not enough to...
You just have a question. But you're talking to the claims department.
Yeah, they're probably going to open it. If you have a question, you should call your agent. Really is what it boils.
Call your agent.
Yeah.
Avoid the claim.
Yeah, call your agent because anything outside of that could create an incident for you. And if that's all that exists on your history when we're pulling information, not a big deal. But if you had a claim a year ago and then now you have this incident and then next year you have another claim of some kind, that's where it really starts to impact you, because most carriers are going to look kind of at a rolling 3-year calendar for incidents, 3 to 5 years.
3 to 5?
And so, they will... they'll ding you for that, even though, because now what they look at is if you have 3 years and 3 incidents, now you become a bad risk for them because they don't care why the incident's there. They just know that it's there.
Do they just drop you or just keep jacking up your insurance?
Now, if you file big claims or a lot of claims, they'll drop you. But usually it'll be a rate increase. And that's where I will say that's where an advantage a broker will have is because we're a captive agent, they can only shop you within their own product. And if you're no longer a good fit, you're no longer a good fit.
Okay.
Whereas a broker or an independent agent is going to have access to lots of different carriers. And so if one carrier doesn't like you anymore, we can typically find one that does.
Okay. So would you say that that's a really good question for a consumer that's looking or shopping for insurance when they get referred to somebody is to ask the question, are you an independent or captive agent?
Yeah, you can ask for sure, but there's a real easy way to know. If the name on the business, the name on the card, the name on the website says the insurance company first,
Okay.
State Farm, Nationwide, Allstate, and
That's
farmers,
that's a
those
captive
are
agent.
captive agents. That
Okay,
means they're
good
only
point.
representing that company.
Okay.
If it's BPI Insurance Agency or John Smith Insurance Agency or
Yeah.
Goosehead Insurance Agency, those are captive agent, or those are independent brokers.
Okay.
So they will have access typically to far more carriers than your captive agents will.
Gotcha. Okay. So we started out with talking about education, right? And that you're educating realtors, but in your touches with your relationship building and walking through a client through a quote, you're also extending that, offering at the very least, if they want it, right?
Yeah.
The education part of understanding their policy. Real quick, before we keep going down insurance, for your agents, right? So you offer a class. Is it CE related?
It is, yeah, it's a CE class.
And just kind of briefly, real quick, let's talk about why is that a good class for agents?
Okay.
Because I'll share
Okay, sure. So my agency I've been in the business for 19 years. In June, it was 19 years. My agency's been around for 4 in May. The whole time has been me growing this in the real estate space. And so I've talked to a lot of lenders, a lot of realtors, a lot of folks in the real estate space.
Right.
And I came to realize that, in my opinion, the process from the client's perspective is a little bit, I don't know if broken is the right term, but something's off.
Right.
And it's usually, and in my opinion, and there is some bias there, it has to do with insurance, right? A lot of times I think if you ask most realtors, hey, when do you talk about insurance with your clients? Or when do you recommend that I leave that up to the lender. That's most of them will tell you that. Every now and then you'll get one that says, oh no, whatever time that they do, right after we, have finalized the purchase, or
Right. Or
they'll
they're
give
not
you
even,
some time frame.
or they don't even touch on it, right?
They don't. Most of them don't. But every
Okay.
now and then, some will tell you a time in which they typically will
Share
talk about
something.
insurance.
Okay.
And then you go to the lender. You've got some fantastic lenders. Most of the ones that I know happen to work here, but that will, work the insurance in at an appropriate time, which in my opinion is right when you contract. But a lot of lenders don't. They either wait or it's kind of the last thing on the checklist. And so now you're trying to squeeze the insurance into this very small little hole that's left over for DTI, and that can become an issue for the client. So one of the biggest messages I communicate in my class, to get back to your question, is when you as the realtor are talking about your inspection, that's when you should be talking about insurance. Because typically the inspection, as soon as you contract, boom, inspection's next. That's getting scheduled the next day or the 2 day, very quickly. Insurance should be at the exact same time, because those two things, to me, go hand in hand and they work kind of together. And at the end of the day, the realtor's main job is to kind of guide the client to make the best home purchase decision for themselves, right?
Right.
I think most realtors would probably agree that that's a good summary of their main job.
Right.
And so part of that is the insurance process. And it's a piece that's factored in when you're looking at the numbers, right? So it should be tackled pretty early.
Right.
And so that's one of the biggest messages I try and communicate in that class is when you do the inspection, do the insurance. It's only going to be an advantage to your client.
Right.
And we can actually put you in a position to either negotiate something else because of what we find on our reporting end. know that, hey, this is not the right house. We need to move, pull out and move on to something else.
Okay.
So there are plenty of reasons to make sure you're talking about insurance
Right.
very early in the process.
Right. I 100% agree. Insurance is a part of, like, we talk about it during my whole loan consultation at the start, because everybody's trying. The market is hard. Affordability is hard. We have the rate factor. Before it was like property tax was kind of like the, right?
Sure.
But we got a tax break, a year ago. There might be another one coming.
Yeah.
That really, really helped.
Yeah.
But it's like it didn't, because insurance went like
you didn't get to
crazy.
feel the break.
You didn't get to feel the
Yeah.
exactly. I'm like, I was so excited. I remember getting my statement, and I was like, oh my gosh, look at all that savings.
Yeah.
And then my policy doubled, and I'm
Yeah.
like, I didn't even file a claim. What?
Yeah.
And so I do have this conversation with people, because it almost feels like the only thing I can really share with somebody, like with certainty, is like, I can't say with certainty, right? Because we're not locked in early on. But I try to be conservative there, right? But principal and interest, right? I feel pretty certain on, I'm not concerned about our property tax. That's not like shifting or whatever. But the homeowners insurance, oh my gosh.
Yeah.
So, and it's such an important conversation, because
It is.
if you're getting approved and you've maxed out your loan amount, right? And you didn't factor in the right insurance.
Yeah.
Your deal's dead.
Yeah.
Like, your deal's dead. Your closing costs just went up. And your DTI is, you could just, it could be shot.
Yeah.
I remember I had a client not that long ago, they got their contract, right? And DTI was already, tight.
Yeah,
right?
sure.
And it ended up, and it was a much older house. I try really hard, and I always recommend to my agents, like, I'm looking at credit score.
Yeah.
And when I get a property, I look at the roof. I'm
Yeah.
like, where's those roof pictures? Because
Oh my gosh, that's so important.
because I already know, like, between the credit score and a dark colored roof, that policy, that insurance premium is going to be ugly.
Yeah.
And I don't want to misquote it.
And the roofs are a way bigger factor today than the credit score is. Like,
Even
oh
in the
my
credit
gosh,
score.
Yeah, it's crazy.
So, I mean, we could just go off on a tangent just on that, right? So I do try to factor in, and I was sharing with you earlier, right? I remember when I used to use an estimate, right? And I always tell people, this is an estimate.
Yeah.
I don't know what quotes you're going to get, because there are so many other factors included.
Yeah.
But for estimation purposes on a mortgage payment, I would use a 0.65 factor. Then gradually it went up to 0.7, 0.75. I'm at 0.8.
Yeah.
Right. And so that's the factor that I use. I multiply that times the purchase price.
Yeah.
Divide that by 12, and that gives me my monthly.
Yeah.
And every now and then so what typically happens, depending on the home and the client, I can be like, I'm either somewhere between $30 to $50, like, up or down.
Yeah, sure.
So I'm like, well, I mean, I haven't been able to nail it.
Yeah. I don't think anybody will.
I don't think anybody can.
Yeah, no, I don't think so.
Right? But is that a fair factor? So, like, if somebody's out shopping, and let's say you've got good credit, 700 credit, and the house is in nice condition, would that be a fair factor?
So, I mean, we did talk about this a little bit, and if we take a $300,000 home, use your factor of 0.8, that puts us at around $1,200 or $2,400 for the year. So that's $200 a month. That is a safe place. Obviously, as you start creeping up, that's not going to be enough in terms of the cost of the house,
right?
Or the age of the house can make a big difference on our end,
right?
So I think that's a safe number for sure. But typically what I tell lenders or agents or whoever I'm talking to, somewhere between 175 and 225 is kind of the minimum that you want to be estimating. Because
based on what kind of price range?
Of the house, that honestly, that doesn't even matter.
It doesn't even matter. Okay.
No,
Okay,
I mean, if you get low enough, if you're at 200 or below, then you could start going down from there. But anything other than that,
yeah,
I mean, you can have a small house that's 250, 300,000. The premium's gonna be $2,400
at least.
just to give you. My house is not a gigantic house. We're we're just over 2,000 square feet in my house, and our premium went up this last renewal, $1,700 for the year. That's what it went up on top of what it was already at. So, and unfortunately, we couldn't.
I'm not alone.
Unfortunately, we couldn't find a carrier that was any better or that wanted us, because we have a lot of trees. So that was a factor, and
we actually did some tree trimming to try and help, which I was really sad about. But
no, it is sad when you have to do that. But like insurance carriers today want all the new neighborhoods with no trees in them. Like that's what they want. So,
wow. Okay. So, as far as I've had some people say, "Well, I'll just take the higher deductible."
Sure.
Right. So, higher deductible means lower premium.
For sure.
Right. But that's not necessarily the right step everybody should take. That's for somebody.
Not everybody.
Who, right? So what are some factors to consider? So as a person is shopping, what are three top things that a consumer should be asking or making sure that they have in place on their policy? In order, so there's what we need to qualify, right?
Right.
And then understanding that you can always adjust your policy later as well.
Yeah.
Yes.
Yes.
And so, but what are those top three things that somebody should know?
So that's a very good question and kind of a difficult one to answer because it is on a per case basis, right? We talked about meeting people where they are. That is kind of what are you wanting to accomplish, right? If the goal is to get into the house, then we can do a lot of things, right? We can
make it work.
Yeah, we can make it work. Now, does that mean that's the best policy for you as somebody that lives in the household? Maybe, but maybe not. And so, if the goal is to get into the household and DTI is an issue, we can always bump the deductible up. Some carriers will let you go as high as 5% if the loan allows for it. We can do that, right? I will tell you, when we went to closing, we bumped we bumped ours up to 5%, so we didn't have to bring as much to closing. Not because DTI was an issue, we just didn't want to bring as much to closing. And then as soon as we closed, we bumped it back down to 2% is what we ended up keeping it at. But so that's, you can do that. You can also strip the policy down as far as coverages go. That's another way that you can make a difference in premium. And those things can both be done, right? We can make a policy super cheap for closing and then adjust it. And my general rule of thumb is like, as soon as they hand you the key and told you it's funded, we want to adjust the policy. Right, exactly, because that's going to make a huge difference.
Right.
And what you're protected about and or protected for. And and so it really depends on what the client really wants to do.
What need is that must
be met. Yeah, exactly.
Right? But going forward, right? I've known people that they get their policy and then they never look at it again or whatever, right? But do you guys do annual check-ins, annual calls?
Yeah, we do, especially with the rate adjustments being where they have been.
Okay.
We try and stay on top of that. Not every carrier makes it as easy as others. But if we get a rate increase, we're going to look at that. And if there's a jump, we're definitely going to reach out and try and stay ahead of that for you.
Okay.
So that's definitely something we do. The other thing I do want to talk about a little bit
Yeah.
is kind of to your question, is most people just don't even know what's involved in a home insurance policy, right? They have no clue.
Right.
They're going to look when they're given unfortunately, most agents that I've seen or processes that I've seen, the agent is going to provide them the quote, right?
Mm-hmm.
And they send it to them. They tell them, here's a couple of quotes, pick one. Well, the client most of the time is going to do is they're going to look at, okay, which one's cheaper?
Right.
And that's the one that they're going to pick 99% of the time.
Right.
So I think it's super important. We talked about education earlier, is to take the time to educate those clients and let them know what the differences are.
Right.
And walk them through, hold their hands a little bit through that process, especially when they're purchasing a home. It's super, super important. And so, to me, one of the things I like to tell folks is a home insurance policy breaks down into what I call the front end and the back end, right? And the front end, I don't care what carrier you're looking at, it's almost always going to look the exact same. The front end is always going to be the same from one carrier to the next. And from a coverage perspective, the dollars can look a little bit different, but the coverages are basically going to look the same.
Right.
The back end is really where you start to see some differences between policies and how they're put together. And so the best analogy I can think of is think about making a roast, right?
Right.
I'm a foodie, so I like food, and that's where my brain goes a lot, unfortunately.
I'll go right with you.
So you could take a roast, and you could throw a little salt and pepper on there, throw it in a smoker, throw it in the oven, a crock pot, wherever you want to. It's basic, but it's going to be good, right? A roast is going to be good. It's tasty. Or you could take that same roast, and now you could add celery and onions and potatoes and carrots and whatever else you want to throw in there. And it's going to be way better, right? It's going to be way more delicious, way more robust in flavors. Well, that's the back end of a home insurance policy. That is the coverages that you would probably just assume are there that actually have to be added to the policy. That's going to get you extra percentages towards the dwelling amount, right? If we're cutting it close on the dwelling for reconstruction values, there's a coverage you can add to boost that up a little bit if it turns out to not be enough.
Right.
Replacement cost for the roof, even though we're starting to see more and more carriers get really, really stingy with that. If you want replacement cost on the roof, most policies you have to check it off. It doesn't just automatically come with replacement cost.
Really?
Things like replacement cost for your stuff inside the house, for all of your things. Again, you have to mark that off. Coverage for your glass.
Like windows?
Yeah, windows. It's called glass coverage.
I didn't know.
Most home policies don't automatically include coverage for windows. And so you have to select it on the policy. And it's little things like that you really start to see some differentiation between policies. But most people are just going to look at that front end and look at the dollars, and that's it.
Right.
Excuse me. So I think that's important to know, and we make sure to walk our clients through that so that they understand. And if somebody else is a better option, if State Farmers is a better option than what we have to offer, we'll tell them that gladly.
Yeah. Right.
Because for us, we want to make sure they're protected.
Right. No, and I think that it's really important to have that conversation and make sure that your agent is having that conversation with you, because I remember when we got our coverage, one of the things that made me select our agent was that she was the only one that said, "Hey, I noticed you have a lot of trees in your backyard. So with a lot of trees come a lot of roots. With a lot of roots come the potential to have issues.
Foundation issues.
With pipes.
And pipes, yeah.
Right? And I was like, what? I'm just looking at the trees.
Yeah.
And I'm like, they're so pretty.
Yeah.
Right? And they're like,
for sure.
they could cost you. I'm like, ah.
Well, so you've got the top and the bottom, the branches too.
Right. And
carriers don't like those.
So I felt I was comfortable. I was like, well, it just made sense.
Yeah.
Like, so if you take the time to explain the policy properly, I think the premium's not really an issue unless you got a DTI issue.
Right.
But
a lot of DTI
makes
issues
sense.
are paper issues. And what I've come to experience, you know, maybe you've got one spouse is the only one on there, so we're not even factoring in the other
the
spouse.
other income.
So
right,
it's a
right.
paper issue. And so
There's
we know we
workarounds.
have to work with it
Right.
to make it work to get them to
Right.
closing, but the premium becomes far less of an issue
Right.
because it's not a real DTI issue for the household. It's just
Right.
for the loan. So,
If we could go into so many
oh
different
my
topics.
gosh,
for
yes.
real.
Scratching the surface.
I know. There's so much, but you know, I always say, in hindsight, right? That's the worst.
Yeah.
Is waiting
Yeah, you
for something to happen and then going, oh my gosh, I didn't have the right coverage.
Yeah.
I can't take care of this or
Yeah.
whatnot, because your home is your investment. You need to protect it, even if it's paid off.
Absolutely.
Especially.
Absolutely, because now it's all on you for sure.
It's all yours, right? So that's like a common thing
Oh my gosh,
where
yes.
I run into people that are like, oh, it's paid for. And I'm like, yeah, but
And to that note, real quick, I know we're getting ready to wrap up, but once you go with no coverage, insurance carriers, so think of insurance carriers as fortune tellers, right? They're trying to predict the future,
okay.
right? For you as a risk.
Okay.
How likely are you to file a claim? And if you are going to file a claim, what kind of claim are you going to be filing, right? They're trying to predict that by looking at the past,
Okay.
by looking at insurance reports and claims history and all that stuff. So if they don't have a past to look at, then they don't like it. That makes it harder for them to predict the future. So when you have a gap in coverage, especially on the home, it becomes much harder to find coverage and much more expensive a lot of times until you get
established
history.
Okay.
Right? And then you can start shopping around and more carriers will offer you coverage and that type of thing.
Wow.
So again, another thing that most people have no clue about, I see it all the time. People have paid off their loan, haven't had coverage for 5 years, 10 years because they paid it off. And then, something happened or somebody got in their ear and now they're wanting to look at coverage, or maybe they're wanting to get like some sort of line of credit on the equity that's in the house, and they have a hard time finding coverage for that kind of thing.
Right.
Yeah.
So that's a good point. I did experience that. Saw that happen for a client, and it's hard. Like, it almost seemed like we couldn't. I don't even know if we ever found.
Yeah. I mean, you have to on our end. You can find coverage.
Yeah.
You can.
It was just.
It becomes a lot more legwork, a lot more time and effort on our part.
Right.
But at the end of the day, we should be willing to do that.
Right.
You got to go hunt for the carrier that's going to want it and offer the coverage that's going to suffice what y'all need on your end.
Right.
So.
Well, so we are going to wrap it up, and but before we do, is there any tip or anything that you commonly see that you wish more people knew when it came to insurance?
So there's a lot that I wish they knew.
Okay.
But let me think about this for a second. A tip I would definitely say is shop your insurance coverage, right? Your home insurance, especially. Auto is, a little bit more similar across the board. There's a lot less variance from one carrier to another. But on the home side, shop your coverage and talk to different agents. I think that's important. If the education piece is important to you, then find an agent that is going to educate you.
Right.
I think that's huge. As far as what I wish that they would know is don't file a bunch of claims.
Just because you have insurance.
Yeah, insurance. This is from the insurance carrier's perspective, right? So from the carrier's perspective, they are not there to repair every little thing that happens. They are there for the catastrophic things that you cannot handle on your own.
Right.
So to give you a quick example of that, last year, my wife and I had to file a home insurance claim. But before we did that, we didn't pick up the phone and dial the 800 number. We brought in some contractors and got some estimates.
Okay.
We had a leak in a pipe that was in our foundation, and it damaged some floor. And we have wood floors in our house. And so I didn't know at that time that with wood floors that are on concrete, if they're proper wood floors, then they're glued down. And you can't just cut out like you can tile and replace those few little pieces. Oh. You have to replace everything that's kind of connected that's the same flooring.
Okay.
Well, in our house, the whole house is the same flooring, and it's all connected. Floor. And so that we were like, okay, if it's because our deductible was $4,700, so we're like, okay, if it's $5,000-10,000, we'll probably just do it ourselves.
Okay, makes sense. Yeah.
Well, it ended up being close to $40,000 total, and so
that's a claim.
That's a claim. That's when you pick up the phone and file the claim. That's exactly right.
Right.
So that's one thing I would say is I see very often these little $1,200 claims, $5,000. And it might feel like it's a lot, and that's what your insurance is for. I promise you it's not, and I promise you it's going to hurt you a lot more in the long run than the little bit of help you got in that claim. So that would be my tip.
Well, great point. I'm glad you said that. So if anybody's needing help, direction, agents that want to do a CE class, how do they reach you?
So I'm on Facebook. I'm on Instagram, not that much, but I'm on there. LinkedIn, all under my name. BPI. We can check out our website, BPI Insurance Agency, or BPI Insurance-agency.com.
Same for consumers then.
Yeah,
right?
Same for consumers. And phone number 210-761-6001. Awesome. That's our office line, and that'll ring to the three of us. Okay. Yeah, that'll ring to all three of us, so whoever gets it, gets it. But,
awesome.
Yeah.
All right. Well, thank you so much. I really appreciate you sharing this information.
Yeah, it was fun. I appreciate it.
Thank you. Thanks so much, guys.